At exactly 2:17 in the afternoon, nearly $1 billion left a bank. No alarms sounded, no vault doors opened, no masked robbers ran through glass doors. There was no break-in, no breach, no crime scene. And yet, the money was gone. So how does a bank lose $900 million without anyone stealing it? In modern banking, money doesn't move in bags. It moves in keystrokes. Every day, trillions of dollars pass through systems so complex that no single human fully understands them. They are trusted because they have to be. But in 2020, one of the world's largest banks sent almost $1 billion to the wrong people, by accident. What followed wasn't a smash and grab. It was a silent disappearance. Some recipients sent the money back immediately. Others didn't. And suddenly, a question no one had seriously asked before became unavoidable. If a bank sends you money by mistake, and you keep it, is that theft? This is the story of the heist with no robbers, and how modern finance learned a lesson about itself that no one could ignore. To understand how this happened, you have to understand how big banks actually work. Citibank isn't just a place where people deposit money. It's an infrastructure layer for the global economy. Behind the scenes are payment platforms, loan servicing systems, and settlement networks that move money between corporations, governments, and investors at immense speed. One of those systems handled a routine task called loan administration. In this case, the loan belonged to Revlon. Yes, that Revlon. By 2020, the cosmetics giant was struggling. Sales were down, debt was high, and it owed hundreds of millions of dollars to a group of lenders. Citibank wasn't Revlon's lender. Citibank was the agent. That meant Citi's job was simple: collect interest payments from Revlon, distribute them to the lenders, keep the books clean. On paper, this was one of the safest, most boring jobs in banking. Until it wasn't. The payments were handled through a piece of internal software, an old one. It wasn't designed for modern complexity. It had been patched, extended, and layered over for decades. And crucially, it wasn't intuitive. To send interest only, an operator had to input numbers in a counterintuitive way, by manually entering the entire loan amount and then offsetting it internally. It was like writing a check for your full mortgage and trusting the system to subtract everything except the interest. Most of the time, it worked. Until one afternoon, it didn't. On August 11th, 2020, a Citibank employee initiated what should have been a routine interest payment. Instead, the system processed it as full loan repayment. Principal, interest, everything. Almost $900 million was sent out to Revlon's lenders. Instantly, legally, irreversibly. There was no confirmation screen that said, "You are about to send $900 million," because the system believed that's what it was supposed to do. Within minutes, the money had landed in dozens of accounts across the world, and Citibank hadn't noticed yet. The realization didn't come from an alarm. It came from confusion. Phones started ringing. Lenders called asking why their loans had been repaid early, during a global crisis, by a company on the edge of default. Inside Citibank, panic set in. This wasn't just a mistake. This was existential. Because once money leaves the bank through authorized channels, there is no undo button. The only way to get it back is to ask. Citibank contacted the recipients immediately. Some lenders responded within hours. They sent the money back. No hesitation, no argument. But others didn't. They looked at the transfer. They reviewed the loan documents. And they reached a chilling conclusion. The payment looked legitimate. It matched what they were owed, eventually. And legally, it wasn't obvious that it was a mistake. so they kept it. This is where the story turns. In everyday life, if your bank accidentally deposits money into your account, you're expected to return it. But corporate finance plays by different rules. These weren't random individuals. They were sophisticated hedge funds, institutional investors, entities designed to extract value from legal ambiguity. And ambiguity was everywhere. The payment was authorized. The money was real. The system worked exactly as programmed. Citibank hadn't been hacked. It had obeyed itself. Citibank sued. The argument was simple. This was an obvious mistake. The defense was just as simple. It wasn't. In court, something remarkable happened. Judges weren't evaluating morality. They were evaluating reasonable belief. Would a rational lender believe Revlon had suddenly repaid its debt in full, in the middle of financial distress, without warning? Some judges said no. Others said maybe. And in one stunning ruling, the court sided against the bank. Citibank, the institution designed to prevent this exact scenario, was told it might have to live with the consequences. Eventually, Citibank recovered most of the money, but not all of it. The bank took a loss measured not just in dollars, but in reputation. Executives were reassigned, controls were rewritten, systems were re-examined. But the deeper damage was philosophical, because this wasn't a failure of security. It was a failure of certainty. This wasn't an isolated incident. Banks have accidentally sent money to the wrong places before. Trading algorithms have erased billions in minutes. Software errors have triggered flash crashes across global markets. Each time, the explanation is the same: complexity. Modern finance is no longer fully human scale. It's a conversation between machines, with humans supervising from the edges. And sometimes, the machines speak too fluently. This story isn't about incompetence. It's about trust. We trust systems we don't understand because we have no choice. We trust that numbers on screens correspond to reality, that software behaves as intended, that safeguards are real until the day they aren't. And when that happens, there may be no villain, no robber, no crime scene. Just silence. At 2:17 that afternoon, nothing dramatic happened. No doors opened. No alarms rang. But the illusion that money is always under control was quietly broken. Because the most dangerous heists don't require force. They require permission. And sometimes, the system gives it willingly. If you want to understand how systems fail quietly, without alarms or villains, you'll find more stories like this here.